All right, good morning, ladies and gentlemen. Today is March 18th, 2020, and I'm back with another Wednesday edition of the live show. And I'm not going to do an extremely long show today because there's only so much to talk about with all this market turmoil. But I got to tell you, there's it's impossible to keep up with all the news these days. There's so much going on, but I'd like to welcome everybody to the show this morning. And we're gonna take a look around real quick, and there's some really interesting things I have to talk about. First of all, if you noticed on the home page when you logged in this morning, we have a special note here, so be sure to read that. Basically, basically this is something Jeffrey wrote up to let everybody know that a couple of things. One is that, and we've talked about this a long time ago, having a recovery watch list, and now seems like the perfect time to get that integrated. And so we basically Jeffrey's already had. You got those of you that have been around for years and years and years. I mean, geez, 6 years ago, 7 years ago, we were doing the Wednesday night shows. We used to talk about different recovery plays and how to play them and that type of thing. And so Jeffrey has a really good sort of algo written, and this is going to be a new addition that we're going to introduce here real soon. And a week from today, I'll have Jeffrey on the show and we'll go over how to trade the new recovery watch list. And so basically what that is that there's going to be a lot of stocks that are unfairly beaten down in this market sell-off or collapse or whatever you want to call it. But we'll pull up the weekly chart here real quick while I'm talking. Here's the thing: is that the market's going to recover, right? Not the end of the world. And so, while there's a lot of unprecedented stuff going on, even this morning the futures were limit down. They opened it, the market started rallying. We've seen a couple of pretty sharp rallies along the way, but what I've noticed going through individual stock charts is that literally everything's just getting thrown out. The old proverbial throwing out the baby with the bathwater, right? And so what's going to happen is that at some point this market's going to we're going to have some really significant bear market rallies along the way. There always is, and there's going to be tons of opportunities to swing trade once the dust settles, right? Because the idea is that when you get sort of a market reset like this, and those are the words that Jeffrey used was market reset. When you get a market reset, then once the dust settles a little bit, we're more likely to start getting back into normal sort of swing cycles. We'll get cycles up and cycles down, and this is honestly going to create tremendous opportunity. And the good news about swing trading is that like what was a couple of weeks ago, we had no open trades, and then we had a few trigger, and they got stopped out. But when you're swing trading, you're basically taking advantage of the short-term cycles, and it's not like you've bought and held a stock that's down, so far that it's not going to recover. So anyway, we're going to introduce like a brand new thing to our system, the recovery watch list, and it's going to be on its own page and have all its own rules, and will make for some really good addition to what we're doing. So we'll talk more about that next week once we get everything integrated. For now, geez, I mean, I look around at individual stocks, looked at tons of them, and then a lot of stocks nowadays, you got to look at the weekly chart to really see where you are. One interesting thing that I'm noticing here today is that we're starting to get, a trend line, an actual trend line. One of the things I talk about here kind of frequently that you don't hear much if you watch the guys on TV is, is everything's a function of price and time, right? And so what reminded me of this is back here when we had the original sell-off, a few big down days, everybody on well, I don't say everybody, but a lot of people on CNBC were out already saying, buy the dip. And then, you get this sell-off, and then like right here, everybody thinks the worst of the sell-off's over. And so, it's just, I don't know whether it's, well, I mean, I don't know the motivation. I mean, we haven't really seen a sharp sell-off like this since the end of 2018, but for some reason, these Wall Street professionals they bring on CNBC, they're always so anxious to just jump right in and buy any dip. And I suppose for a long time that's kind of worked, and then they figure, well, if it sells off even more, then that's even a better opportunity, right? But to me, like everything's always been sort of a function of price and time. And I went over that the past few weeks when I was talking about the pending trades and why when a stock hits the pending list that the entry is so much higher than the current price. And the reason is that gives the stock time to sort of settle down and bottom out and begin a new, swing cycle up. So anyway, it's going to be, here's an interesting trend line to watch. And of course, everybody was freaking out this morning because futures were limit down again. And, the Fed's throwing the kitchen sink at this thing, and they're talking about bailouts again and all that. And so, at some point here, the market's going to find a bottom, and it's going to have there's been a couple of really sharp bear market rallies, right? There was even yesterday. I mean, yesterday was these swings are incredible. I think it's been like 7 days that there's been like 7 days in a row that the Dow swung over 1,000 points. I mean, we're seeing limit up, limit down, gap ups, gap downs. So we're in a pretty crazy time now, but quite frankly, this is going to create some extraordinary opportunities. One thing I did last night, just for the fun of it, I was running some scans, and I was looking at stocks with like super high dividend yields. And I mean, it's crazy if you just go out and find if you sort stocks at Finviz by dividend yields. I mean, there's some stocks, generally the energy stocks, and pipeline stocks and that type of thing, but there's some REITs in there that, I mean, the dividend yields, which will probably get cut. But I just thought it was sort of a fun exercise. I mean, literally, based on how some stocks have sold off, their dividend yields are like, they start at like, 200%, 100%, and then go down to 80 and that. So I did some further screening, and there's some REITs out there that have dividend yields like in the 20 something percent. And I remember this back in 2008. I remember going through the closed-end funds at BlackRock, looking at the yields. Some of those suckers were yielding 15, 18%. And you'd think, oh man, junk bond ETF or whatever. You wouldn't want to touch those with a 10-foot pole. But amazingly enough, a lot of them actually made it through all of the carnage. And so anyway, I expect the same thing to happen again. This is gonna, as rough as the time we're going through, it's gonna create some opportunities going down the road. And so, our new little thing that we're gonna introduce is gonna capitalize on that. So, um, Boeing seems to be Boeing is the real talk of the town here, just because of because of how far that is. I mean, they were having troubles before any of this pandemic stuff started, right? And so just absolutely incredible. And this is an amazing chart. There's a handful of stocks are actually sort of holding up here, And real quick before I get into that, oh, by the way, we have two stocks that are triggering today, so I hope you hope you noticed that. We'll go over those in a minute, but real quick, let's just look at the S&P 500 here. I guess we're gonna have to go to a weekly chart. Um, this trend line's broken, right? And this week's high is under that trend line. And so that just that shows you like the technical damage, right? And I had more stuff drawn on here. Basically, this sort of parabolic trend line, and like I said last week, this rally right here from last fall, like into the beginning of the year, that was kind of the obviously easy to say in hindsight, but that was sort of the blow off top, right? Nobody could think of any reason for the market to go down. And then you had a couple weeks there where you took a little dip because of what was going on in China, and then for whatever reason it got sort of shrugged off. Everybody thought that, well, I don't know what they were thinking, but it got shrugged off when we made new highs. But this trend line on the daily chart anyway, I like to draw like short term steep trend lines. At one point, I had this trend line even steeper, but I had to adjust it. And so, once that got broken, then there was some support levels. But typically, the when a trend line gets broken, that's when you have the potential for a bigger sell off. And so that was sort of the first shot across the bow. And there was a bunch of support. I had another horizontal line up here across these highs right here, and here's where the Fed cut interest rates, and so right about 30 or so, there was a big support level that got taken out, and this obviously was a huge support level, but this weekly trend line, is obviously broken now. So anyway, here's something. Here's sort of another really important level here is, and the market seems to be holding this, but on the futures too. I got a 60-minute futures chart up, and down around 2350. I mean, it's actually a little over 2350, but 2350 is another sort of really super important area because the low back here in December was 2346, right? So, huge support level that you can see on the chart there. And, below that, geez, there's more support. There's support here, 2200, kind of a zone between these highs and these highs here, right? So there's still a lot of support to go. So here's something really interesting. Let me do this on the Dow because I think I already have it. Yeah, there we go. So check it out. Here's a Dow monthly going back to the bottom in March of '09, right? Drew a Fibonacci on here, and so basically, the Dow, which has fallen a little bit harder than the S&P. Let me do this on the SPY just for the fun of it, because the Dow's kind of in its own world with Boeing, and so it's interesting. I mean, Boeing, geez. I don't even know, I don't know what to say about Boeing, but I do know that the Dow is, which usually is a pretty good reflection of the overall market, has its own issues, simply because of Boeing. But oh, hang on, I gotta fix my screen here because I just noticed that y'all can't see the left side of it. Let me squish my chart down a little bit. There we go. That that makes it a little bit better. All right, so what I did here is I just drew on a monthly chart. I just drew a fib from the low of '09 up to the recent high, and look at that. I mean, it's almost it's amazing that this recent sell-off here. Excuse me. Oh, I feel fine, by the way. This recent sell-off here that we got going came down and has literally like tested. 38.2% retracement of, the entire bull market rally, right? Pretty amazing how that works. And I mean, what's crazy about it is, and I'm not saying that I even have my lines perfect here, but absolutely so close that it's just uncanny, right? And you guys know I'm not a huge Fibonacci guy or anything like that, but it's still darn interesting. Still interesting to see that, that so far that's holding. And so, hey, there's a, oh, and by the way, I have this is a log scale right here. So if we go to the daily chart, you can see that, and so SPY is a little bit different than SPX2, but I didn't have a whole lot marked on my SPY chart, so I figured that'd be the good one to put the fib on. Close enough for government work. It's a little encouraging this morning to see the market, which will limit down, like rallying back up. But yeah, here's the thing: the market is still going to trade off of bad news. There's still a lot of potential for it to. It's trying to find support at these lows, right? And so it's so oversold. That's the other thing I want to mention on this weekly chart before I move on. If you look at the RSI on the weekly chart here, I mean you can go back on the weekly chart anyway, as far back as I can go, 2011. The RSI has not been as oversold as it is right now. So that's kind of interesting. Typically, the market bottoms out somewhere around RSI 30. And that's true on, the daily and the weekly. And let's look at the monthly here. Oh, I don't have an RSI on the monthly. I'll just change this to a monthly real quick just so we can see what it looks like. Yeah, monthly RSI. Look at this. It's pretty interesting. 38. Wow. And of course, this happened a lot faster than the 2000 bear market, where the RSI looks like it bottomed just under 30. And then, of course, the 2008 meltdown, RSI really got buried there. It got down to 18. So that was the great financial crisis, right? So still a little ways to go. And, of course, here's the thing is like we're only halfway through the month. So whether this means anything now, I don't know. When you look at a monthly chart, typically you want to do that at the end of the month. But so let's see. Real quick, I wanted to look at daily RSI. There we go. The daily got buried, pretty early on and bounced, and it's just been sort of waffling, right, as the price went down. So you can't make too much out of that. We're in kind of unprecedented times. So anyway, so the market's going to do what the market does. Hopefully they'll keep it open, but regardless, it's going to create a lot of opportunities going forward. The thing to do is be relatively patient. However, as we speak, we have two trades that are triggering today, and I wanted to take a look at those and mark them up for you live here on the show and see what's what. So, there has been a few stocks that have been sort of bucking the trend. We have a nice handful of pending trades here. We can take a look at those, but real quick, let's. These are actually, in theory, they're triggering today, but as you know, there's a little more to it. So here's the first one, Eli Lilly, right? And by the way, you guys know that all of a sudden the ranges have gotten a lot bigger. So I mentioned this last week, and this is one of the things Jeffrey wanted me to reiterate is in this kind of crazy environment, you want to trade smaller, trade half or a quarter of the position you normally would. Um, we're going to catch some really good entries at some point, right? But buying in, before all the worst of the news is over may or may not work out. And so here you go. The trigger on Eli Lilly was 142.50, right? And so I mean, big sell off and a bounce and another sell off and a bounce, and you know, yesterday's long range day basically triggered in because it closed over it. But here's the trick, right? Is this stock is not triggering in yet. Trigger 142.50. So here's basically the key. The key is that, and you guys know this from watching the shows and reading the documentation, all that good stuff, is we wait for a stock to close over the trigger price. I don't know why I capitalized that T. It looks weird because I don't usually do that. So today, Eli Lilly is only a buy. It's only a buy if it trades over 142.50, right? So as of right now, it's it's down a few percent, right? Gap down this morning, gap down real big, and so now if it opened above it or if it trades above it intraday, even if it trades above it intraday and fades back down, but the stock has to trade over the trigger price the day after it shows on the trigger thing in order to be officially triggered. So the system automatically throws these stocks onto the open trades list when we do the update at night before when they trigger. And so this particular one, if this doesn't trade up to 142.50 tonight, then it'll just get removed from the list. It'll remove from the open trades, I should say. That's just how it works. So be aware that this is not officially triggered until it trades, until and unless it trades over 142.50 today. Campbell Soup is the other stock we have triggering in. Interestingly enough, we had a look at how flat it was back over here. We had a trade in Campbell Soup, back in back in January, that made it almost up to the target, and the trailing stop came up, and it didn't really wasn't too exciting. It looks like it looks like it basically the trailing stop came up, and it was kind of a break-even trade. So I don't think it quite hit the target. But anyway, this is a little bit different story. So on Campbell Soup, the trigger was 51.50, right? 51.50, and so let me mark that. On here. Yeah, I figured as long as we only had two, that I'd just go ahead and mark everything live on the show today. So there you go, 51.50. That was the original trigger price, and of course, it blew through that yesterday and closed way above it. And so at today's open, and that's kind of the idea is that, hey, if it closes above the trigger price and then trades above it the following day, then theoretically, that's a buy. But based on what you saw right at the open today, probably wouldn't have necessarily wanted to pull the trigger up here, right? A couple of bucks higher. So, and like I mentioned last week, the closer to the trigger price that you in these tumultuous times, the closer to the trigger price, or if you just set a limit order at the trigger price, might be the way to go. So anyway, but this is officially triggered in now, and let's see, the initial stop is gonna go down here at 47.50, which is kind of interesting. These ranges are really, making things a little bit different than normal. I mean, typically, right, the initial stop's going to go below the low of the pattern, but the system, for whatever reason, is saying that, the initial stop goes here. It's calculated down here rather than at the bottom of the pattern. So initial stop, 47.50. And as you guys know, that that can come up very quickly. I mean, it all depends on the price action, right? All depends on the price action, and so um, the average range on Campbell's soup, before was minuscule, and now all of a sudden these ranges have picked up huge, and so I'm showing 3.3%, and it was probably less than 2%, but the system is using a monthly average range. So anyway, with the additional expansion in all the ranges of individual stocks comes a little bit of additional risk, and that's why you want to trade smaller size, right? Just take a little, just take a little pot shot at it. Not a huge big deal, and so there you go. Oh, and by the way, I was about to talk about the percentage risk here, but the calculators page, the server that's running the calculators page was having some issues, and Jeffrey's going to get that sorted out relatively soon. So in the meantime, we had to do the percentages on a calculator, but we'll get that the calculators page sorted out and back up. It's basically it's still there and working, except for the servers having some issues that he needs to get in there and fix. So no big deal. We'll have that going. So there you go. Eli Lilly and Campbell's soup, and it's going to be interesting to see. This may not trigger today, and in which case, it may still be viable. So keep that in mind. This may still be entirely viable here going forward. So, and I might as well mark it on here because the stop on this, if it were to trigger in, the stop, the initial stop, I should say, is down here at 128, which is kind of below the last few days. So just keep that in mind. And in theory, um, initial stop 128. So there we go. In theory, this is still pretty much viable. So we'll have to see what happens with this. We're kind of in an unprecedented market environment here, but like I said earlier, things that at some point this is really going to create some good opportunities here. So there you go. There are the two trades that are triggering in today. Campbell Soup's the only one that's actually official here so far. So now let's take a look at some of the other ones that are on the pending list. Come down here to the pending list, and we had a lot on there that dropped off. So that's just sort of the nature of what the market's been doing. This ZM seems to be holding up pretty well. So let's see, triggers up. The trigger's still quite a bit higher, but we get any market strength. This one is already held up pretty well. As a matter of fact, I think we might have had a trade in this that got stopped out, but this is a stock that video conferencing, right? This is one of the stocks that kind of when all this market turmoil started is an extremely volatile stock. These ranges are, it says 3.2 average range in the system here, but that's calculated over a month, and so it's kind of an expensive stock. But anyways, that's one to keep your eye on there. If this thing really busts out to the upside, then it looks pretty good. Gilead is another one. Gilead's sort of been, I don't remember what I drew that, but there's a lot of volatility going on here, right? But Gilead not looking too bad here. Boy, it took a winger and then just really bounced back up. So, and this is one of the ones talking about on TV. So, um, triggers at 75.50 on this, and so depending on It didn't close over the trigger yesterday, right? Poked up at it and faded back down. Looks to me like it's got a pretty good chance of closing over the trigger price today. So let me just mark that on here. It's not official yet, though, right? I mean, theoretically, theoretically, this thing could, and we've seen this kind of price action here recently. You know, is you get this big rally, intraday, and then you get a fade, and so it's not officially triggered until you get a close over here. Although, I mean, compared to most stocks out there, it doesn't look too bad, right? Here's another one, TDOC. This one I'm sure you've heard about. We've talked about it a lot. There's not a whole lot of stocks that are holding up in all this carnage here, and so some of these you may have heard of if you watch CNBC like I do, but these are kind of the trigger on this one still is still a ways to go up here, right? Still a ways to go on this, and so part of the idea of something like this is that it's so volatile here. What you really want to see is the ranges start to narrow up, narrow up. You want to see this come down, and it'd be better off if this triggered out in the future. A week or two from now, at a lower price. So this will float down depending on what the price does. Or this thing could just take off and just rip higher. So you never know, but it's got a pretty good look to it. Um, Recent volatility notwithstanding. So let's move on here. VIPs. Some of these Chinese stocks have actually been holding up pretty well. China's from what you hear and read is kind of getting back to normal a little bit. So this is actually a pretty good. This is actually, I believe this was an earnings pop here. I think I'm pretty sure that was an earnings pop, and then you got a little bit of a fade here. So right now the trigger's way up here, and so that's another one and that's basically a function of the fact that this sell-off is kind of just underway. So this is one that I would expect if it could settle down and sort of trade in a narrow range. Then, like I always explain, on the show, the idea is that, let me just draw another one. The idea is that this trigger price. So here's what ideally what you want to see. Price rallies up here. Say rallies up here, and then sells down a little bit, and then rallies up again, and then and I mean it's may or may not do it anything similar to this, but the idea is that the trigger starts off high, and then it sort of floats down and floats down and floats down and maybe doesn't get hit, and then you know and then you get something like that, right? And that's probably, but it's just sort of for informational purposes. So I mean, theoretically the idea is that you don't want to get triggered in like on that first, the first like dead cat bounce, right? Even though that happens, I mean, we don't have any, obviously don't have any control of, if you get a big enough bounce and it's going to trigger in just based on the numbers. But ideally, this is kind of how you want to see it play out. Is the price action kind of settles down a little bit, the ranges start to narrow up, and some of the best rallies come off of something that looks kind of like this. You got some big rally and a nice pullback and some long ranges, and then you get a few like narrow range consolidation, kind of like what you would see back over here, right? You get some narrow range consolidation, and then a big resumption of the uptrend, big rally kind of like this, and so that's basically just a review of why the triggers start off so high like that. So anyway, I'll leave this on here. We'll come back and look at it in the future. We'll look at some of these other ones here. EHTH. We had a good trade in this one, and it got closed ahead of earnings, right? So I didn't actually mark it here, but yeah. So this one's back on the radar here. Basically, back in February, I think that was a big earnings pop, and then right after that, it faded down, and so it triggered in here at 114.50. And yeah, I remember this one because we talked about, how there was only like a week left for this thing to, and so basically it got closed. It got closed right there at earnings. Make a note on here because we're going to come back to this one. Closed ahead of earnings. So there we go. That's what that was all about. And so anyway, now it's starting to set up again. Really interesting sort of pivot low reversal yesterday. Let's see what the trigger price on eHealth is. It's showing, wow, it's way up here too now. So yeah, this is another case of price and time. Like I was saying before, the everything, our system is kind of a function of price and time, and so just like the initial stop starts off like really super wide, and then like literally the next day can start coming up. Same with this. A couple more days. By the end of the week, this could be down. This could literally be down here in a couple more. By the end of the week or sometime next week. But that's just sort of the system doesn't want to jump in prematurely. It wants to give the price enough time to consolidate, settle down, and ideally move sideways, right? Now we're not necessarily in the kind of environment where you're going to get, well, we might actually, because we haven't seen a sell off like this in a while, but typical environment, you get a big sell off like this, and then the market, you get a rally for a little bit, and stocks just turn right around and rally back up. So in this case, it might be a good thing to see the market consolidate sideways for a while. So last but not least, on the pending list, CCI. Crown Castle. Not really familiar with this, but oh yeah, we had looks like we had something back here, but same thing here. This volatility, this just happens to be, and I mean, this is kind of a weird one here. Had a really nice uptrend going. This was probably the last earnings, and so now we got a big sell down here. Boy, this thing's wild. Um, this is another one where honestly, this current trigger price up here is meaningless for the most part because it's very doubtful that it's just going to like rally up, and close over that and just keep going. And so it's almost like a placeholder, right? And a stock like this, I saw a few that looked similar to this recently on the pending list that just dropped off. So if this thing breaks down, my guess is if it breaks down below the lows of the past few days here, it'd probably just drop off the list. So, and there's probably some other ones that could show up. Clorox is one. Jeffrey was asking me, he's like, what's holding up in this environment? Out of curiosity, and I said, well, Clorox is one that everybody's talking about for obvious reasons, and look at what it did yesterday. Wow, it's kind of interesting that it took until yesterday to make that big move, but this would have been one that if it was pending, there wasn't enough of a sell down right here, right? That was the biggest problem with this. Is that is that kind of went sideways here, and then just had like 2 day sell down and turned right back around. So that wasn't really quite enough to throw it onto our pending trades list. So anyhow, so that's that. That's a look at the current pending trades, and you can keep an eye on this. Like I said, one of them's getting ready to trigger in, and then we got these two, and that's about it for now. Best thing to do in this sort of environment is trade light, trade small. Look at the Dow here. Wow. Um, yes, it's amazing. I mean, the carnage in so many blue chip stocks. Look at McDonald's. So many of these blue chip stocks. I mean, it's gonna be wild going forward. But here's the thing: is some of this stuff is probably gonna. Well, I guarantee it. There's an overreaction. Let me take this moving average off here. There's right now the market is, and I won't say that the market's overreacting, but there's going to be a lot of overreactions in individual stocks that aren't going out of business, right? And so, the thing about it is that there's no telling how low this can go, right? I mean, just because McDonald's is not going out of business, and this reminds me of 2008. Back in 2008, there was a lot the talk of bailouts, and it was questionable whether certain companies were going to stay in business, and this could even be this could turn out to be sort of similar to that, right? Same sort of thing. Talk of bailouts, talk of there's going to be a lot of restaurants go out of business, but there's going to be some companies that don't go out of business. And so the trick is, and this is why we're putting together this new recovery system, because it's just like what's running the system now. It's an algo that is going to be calm and collect and just use data, and we have Jeffrey's got a certain way of figuring out, and I'll remind you guys, if y'all remember um, back on the show, like way back over here. I guess I go to back to the daily chart, but way back over here, Jeffrey talked about, when not to buy and, when to buy, right? And so, you get a stock like Apple that starts selling off, and everybody wants to start jumping in right away. By the way, this got removed from the list. This was actually pending on this first dip, but it sold off too much. But anyway, long story short, what I'm basically saying is that Apple's another one that is not going out of business, obviously, right? But how do you know when to buy, basically? And so that's what we're going to be introducing in the new what we call the recovery watch list. Is Apple will be in there, and it will have you know Jeffrey will explain all this. We'll have a really good presentation on it and explanation, but how to know when to avoid buying prematurely, how to know when the time's right. We had a similar sell off back at the end of 2018, and so there are certain things that you can use. And so look at Disney here. Yeah, look at Disney. Wow. I mean, literally, when you look around at individual stocks, you have to go to the weekly chart to even sort of figure out where you are. So, here Disney is there's a lot of stocks out there that have lost half their value literally in a few weeks. And I mean big brand name stuff too, right? But Disney's not going anywhere, obviously. And so I mean, there's a lot of people out there that will, guys on CNBC will come on and be like, oh, Disney's not going anywhere, so you should, buy some today. Just buy. And, but here's the thing is like, you know, when you're using technical analysis, you don't buy on the way down. You could get lucky, right? I mean, you could have bought at the lows last week and thought, hey, I'm a long-term investor, so I'm gonna pick some up here at 100, just on a whim, and then you thought you were doing great, and then now you think, oh, geez, maybe I should have waited. So, anyway, that's what our recovery watch list is going to be about. It's going to use technical analysis and also a strategy that goes along with it. And so it's going to be a really interesting addition. So anyway, I'm going to wrap it up now and encourage you to hang out and trade. Trade light, be careful, don't risk a lot, and just realize that there's going to be tons of opportunities coming up here. And this new thing that we're going to introduce next week is going to be really, really super cool going forward. So thanks for tuning in. We will see you here next Wednesday.